Okay, so good day. So we are now going to continue the financial statement analysis, specifically ratio analysis in the field of profitability and solvency ratios. Now let's begin with the profitability ratios. As what you can see, so we have different formulas for profitability ratios, the formula and its significance. Why do we need to analyze this one? So that's the significance, okay? Ayan. So first ratio is the profit margin of sales or otherwise known as return on sales. So for you to get return on sales, you need your net income divided by the net sales. So how significant is this one? It measures the profit percentage per peso sales. So it will measure ilan ba yung bumalik, okay, sa'yo. Ayan. Or ilan ba yung measurement or percentage ng income mo out from your total sales. So if mababa yan or medyo maliit yung net income percentage mo, it means na you did not maximize or you did not minimize your expenses. Kasi maliit na lang. So if you will generate higher income, which means okay yung mga expenses mo na minimize mo naman so far. Okay, we have here gross profit ratio. So gross profit divided by net sales. So what is the significance of this ratio? It measures the gross profit percentage on sales to recover operating expenses. Ito yung naiwan after. Okay, gross profit will be the answer or will be left after you deduct cost of sales, right? So ayan. So bali ito yung magiging markup mo. Ito yung actually your markup. Okay? Ayan. So, it measures your gross profit percentage. Next, the cost ratio. Cost ratio could be done through cost of goods sold divided by the net sales. So, it will just measure ilan ba yung cost of sale mo, percentage, out from your total sales. Okay? Kapag medyo mataas yung cost of sales mo, you will only generate a lower gross profit. Meaning, maliit lang din yung magiging extra niya to cover your expenses, di ba? Okay? So it measures the proportion of your cost of goods sold to your sales. Next is the return on investment or return on assets. It could be measured through your net income divided by your average total assets. Okay? So it measures the overall asset profitability and indicates how the management has employed effective assets. Ayun, over asset profitability. So bini-measure niya, okay, how by utilizing your total asset, how much or level of income did you generated? Okay, so yan, that is return on assets. Okay, next is return on equity. So it could be done through getting your net income divided by average stockholders' equity. So it measures the percentage of income derived for every peso of the owner's equity. Now it measures the percentage of upon using your capital, ilan yung bumalik na net income sa or returns. So that's how you measure the return on equity. Okay, so ayan. Next is earnings per share. So for you to get your earnings per share, it is something to do with the dividends. Okay, and the common stockholders earning capacity. Okay, it could be done through getting your net income available to common stock. Okay, so we have two types kasi ng shares. Pagdating sa corporation, it could be common stock and preferred stock. Okay, so ayan, it measures the amount of net income earned per outstanding share. So later we are going to have a problem with this one for you to imagine, okay, what is EPS or earning per share. The higher a company's EPS, the more profitable it is considered. Always remember that. Next is dividend per share. Okay, so dividends paid to common stock over common shares outstanding. So it is the amount of the dividends attributed to each share outstanding. And the last ratio is dividend payout ratio. So dividends per share divided by the earnings per share, it is the percentage of net income paid to shareholders from the word payout. Okay? The percentage, ilan ba yung percentage na nabigay natin, okay? Or paid to the shareholders or yung mga investors natin in the form of dividends. Okay, to deeply understand with those formulas, okay, let's have this as an example. Okay, so as what you can see, we have uh, income statement here. And so this data will be used in solving the different formulas. Okay? So here, mamaya gagamitin din natin to as a solution for the other formulas. Now we'll begin with the return on sales. Return on sales, the formula is net income over net sales. So we will be using 2000V or the current year as our base. Okay, the net income of the current year is 57,925 over the net sales. Net sales is sales minus discounts or allowances. Ayan, for 50,000. Therefore, ilan kaya? Ilan yung percentage ni net income over your sales? Okay, divide lang siya. Zero pa din. It is something to do with the rounding off. Ayan. So, therefore, the return of sale is 13%. So, it is somewhat low, right? Kasi nga, out from your 450,000 na sales derived or generated for a particular period, 57,000 lang yung net income mo. Yung pinaka, ano talaga, pinaka net. So, that's 13% of your total sales. So, medyo maliit siya. Okay? So, ayan. Next, gross profit ratio. So, we have already our net sales. Ang gross profit natin, makikita natin after deducting your cost of goods sold. Ito, net sales minus cost of goods sold. Ito, 153,000. Tingnan natin kung ano yung ilan percentage yung gross profit natin. Divide lang natin 153 divided by 450,000 pesos. Zero pa din, something to do with the rounding off. Dagdagan na natin. Ayun, 34% or 0.34. So meaning, our gross profit ratio is 34%. Okay? Therefore, we could say na mas higher yung cost of sales natin. Okay? So, before arriving to the return on investment, let us now move to the cost ratio. Now, the cost of goods sold is here. Cost of goods sold over net sales po tayo ha. Ayan, 297 yung cost of goods sold natin while our net sale is 450. Let us measure if ilan ba yung percentage ng cost of goods sold niya over the sales. Divide lang natin, dalawa, press enter, so it's 1. Tingnan natin if ayun, that's 66% or 70%. Okay, if you're round up. Therefore, out from the 100% na net sales natin, okay, so 66% of that is cost of sale. Therefore, mababa talaga yung gross profit natin. Kaya 34% lang. And this 34%, hindi pa yung nabawasan ng expenses. Kaya medyo maliit talaga. Hanggang nabawasan na siya ng expenses, ang net na lang or na natira is 13%. So, ganun tayo mag-analyze class. Okay? So dito we could identify na medyo hindi na maximize masyado ng na minimize masyado ng company yung expenses. Okay? Ayan. At saka medyo malaki lang talaga yung cost of sales percentage niya. Kaya medyo mahirap siyang makabawi doon sa net income. Okay, let's proceed to the return on investment. This will be done through net income over average total assets. Actually, we already have our average total assets on the previous examples, right? So, ililink na lang natin siya. Okay, net income pa din is 57,925. Okay, kukunin natin yung average total asset dito sa asset management na ano. So, hanapin natin yung average asset. Average total asset is this, diba? Okay. Ayan. So, our average total asset is 1,271,000. Now, out from this, i-measure natin yung income through total assets. Now, out from the total assets na 1 million, ang bumalik lang sa atin, okay, upon using our asset is 57,000 na net income. So, ilan gayang percentage niya? Divide lang natin, 1 million. So, zero pa din. Medyo i-adjust na natin ng konti. Okay. So, somewhat 46 or, okay, wait lang. Uh, mhm. 0.46 or 5%. So out from using utilization of your assets, ang bumalik lang sa kanya na net income is 57,000 or 5% of the total assets. So medyo maliit talaga yung income generating capacity ng company na to. Next. Okay, tapos na tayo dyan. Let us now proceed to the return on equity. So we have already the answer for return on equity. All we have to do is to explain it and alamin natin kung bakit. Okay, so we have here the data for the shareholders equity section of your of your balance sheet. So for you to solve your return on equity, you need your income minus preferred dividends over the average common stockholders equity. Now, your net income is 57 as stated here. Okay, medyo i-closer natin ng konti. Ayan. I hope it is visible na. Okay, minus 9,000. Saan ba tong 9,000? Ito yung preferred dividends natin. So, sir, if you're going to look at this one, wala namang preferred dividends sa So, kaya nga. So, we need to measure it muna. So, how do we get that? So, we have here preferred stock na 150,000. So, out from this preferred stock, we have 6%. It means na out from your investment, 6% of that is your dividends. So, therefore, we need to multiply 150,000 times the earning or the dividend rate of your preferred shares. Pag sinabi nating preferred shares as to common shares, si preferred shares, siya yung preferred na unang bigyan in terms of dividends. Kasi nga, di ba, preferred siya. Preference shares. Okay? So, ayan. So, ito na. Preferred dividends, 150,000 times 6% is 9. So, therefore, iaakyat natin siya sa formula. 557,925 minus 9,000. Now, tapos na tayo sa numerator. Ang problema na lang natin is denominator. Average common stockholders equity. Common stockholders, remember. So, dito ang common stockholders natin is lahat ng total stockholders equity natin is 960 on the current year and 930 on the previous year. Now, kukunin natin dyan si preference share. Ima-minus natin kasi ang nasa formula, average common stockholders equity. Now, below are the solving. So we have common shareholders equity. So 930, ito, on the previous year, less lang natin tong 150 na to. So 930 minus 150 is equal to 780,500, kaya siya naging 780,500 dyan. Now, on the current year, 960 siya. Tingnan niyo, 960 yan. Ima-minus na natin yung, or i-deduct lang natin yung preferred stock, kaya naging 810,400 siya. So you will be adding all together, then the answer or the result of that will be divided into 2. Okay, that's averaging. So if tapos na yung formula, compute lang natin 57 minus 9 over the operation of this 2. So that is 6.15%. Therefore, upon using your capital, ang bumalik sa inyo is 6.15%. So that's return on equity. Okay, now punta na tayo sa earnings per share. For you to solve your earnings per share, we need your net income available to common stockholders. Saan ba natin makukuha yan? Yung net income kanina dito, ito, 57,925. Okay, balik tayo doon. Okay, so ayan, 57,925 minus 9. Ano to ulit ang 9? This is the preference dividend, the preferred dividends rate. So that's 9,000. Ialis pa din natin siya. Okay, di ba? Kasi sa net income natin, kapag nagbibigay tayo ng dividends, itong net income, dalawa ang bibigyan kasi natin. Si common stockholder at si preferred. Pero when you are solving your earnings per share, minus muna natin yung preferred dividends. Okay? So, wag malito, 57 minus 9 because of the preferred dividends. So, we already solved that kanina, a while ago. Divided by the number of shares. Ito na naman yung problema natin. Okay? So, paano nakuha ang number of shares, sir? Okay, we have here our common stock, right? The 480. Current year yung base natin ha. 480, 30 pesos par. Okay, what does it mean, sir? Kapag nag-i-invest ka kasi, meron yung par. For example, you're going to invest 3 shares, pero ang price ng 3 shares is 50. So therefore, yan yung 5 times 50. So that's ano, 250 pesos. So ganun din yung sa common stock. Ilang shares kaya ang 480 if ang kada share is 30 pesos? So i-divide na natin 480 divide 20, hindi, 30 ito. Okay, 480 divided by 30 pesos per par. So the answer is 16,000 shares. Mali itong nasa figure na ito. This is not 24 kundi 16,000, which is correct naman doon sa formula. Yan. So 57,925 minus 9,000 over 16,000 is 3.06. Therefore, the earnings per share is 3.56. So medyo mababa talaga siya. Sa kada share, ang na-earn lang is 3.06. Next is the dividend per share. Okay, this is how you solve your dividends per share. You need your retained earnings beginning. Usually, si retained earnings sa corporation, lahat ng income mo napupunta dyan, nasa-stock sa account na retained earnings. Okay? So, you need your retained earnings, 330, 400, or 300 on the previous year. Ayan, 300,500. Then, add mo lang yung net income mo, yung nasa income statement, 57,925. Ililess mo yung previous or yung current, okay? Previous, add the net income nung nasa income statement, minus mo yung current. So, yan na lang yung ang makukuha mo is dividends paid to stockholders, that which is 28,025 pesos. Now, sa 28 na yan, i-deduct mo yung binigay mo kay preferred dividends na 9,000. So therefore, ang available na lang kay common stockholders is 19,025. So sa 19,025, i-divide mo yan by how many shares ng common shares? 16,000. So 19,025 divided by 16,000 is equal to 1.19 shares, peso per share. Therefore, ang kada share ng isang investor, bibigyan siya ng dividend cost 1.19 pesos. Okay, so yan lang ang for the dividend payout, you have to measure dividend per share, which is 1.19. I-divide mo siya sa earnings per share na 3.6. So ang kalabasan niyan is 38.88%. So that is the percentage of paying out to your stockholders. Ang nabibigay mong payout kay stockholders is about 38.38%. So that's profitability ratios. Now let us now move on to the last ratio analysis. For today is solvency. Okay, here. Ayan. So solvency, we have different formulas pa din. Ayan. Closer look muna tayo in analysis ng different formulas. We have debt to equity ratio. The formula here is total liabilities over the total stockholders' equity. So what does it mean? It measures the use of debt to finance operation and provides a measure of relative amount of resources contributed by the creditors and owners. Now, as an additional information here, kapag gumagamit tayo ng solvency ratios, it analyzes our capability to pay long-term liabilities. Okay? So kaya liabilities over total stockholders' equity. Next, debt to ratio or debt to assets ratio. It will just measure your total liabilities percentage out from your total asset. Malalaman kasi natin dito kung ilan yung percentage ng liab natin sa total assets. Meaning, kaya ba nating bayaran yung liabilities natin gamit ang assets natin? So, kapag malaki yung assets natin over the liabilities, meron tayong paying capacity for that. Okay, next is the equity ratio. Equity ratio could be done through your total stockholders' equity divided by your total assets. Okay, so it just measures the amount of resources provided by the owners of the firm. Okay, and the last one is times interest earned. So you need your earnings before interest and taxes. When we say earnings before interest and taxes, yan yung income mo na hindi pa nababawasan ng interest expense for loans and taxes for your payments sa BIR. And then divided by the interest expense. Okay? So EBIT or earnings before interest and taxes is the income from operations before deducting the interest and taxes. Now, to further analyze this formulas, let's have a example. Okay? Ayan. So here, we have the balance sheet and we have now the different formulas for this. So debt to equity, we will use both years, the current and the previous year. So the total liabilities here is 270 from the current and 382 from the previous. Our total stockholders' equity is 96400 on the current, 93500 on the previous. Now, we are going to measure ilang percentage ba yung utang natin sa capital natin. Divide lang natin, put equal sign. We're going to put a formula, don't forget, or else magiging mali yung formula natin. Divided by the stockholders. Okay, therefore, our liability is 28% of our total capital. So medyo hindi siya naman ganun kalaki. Okay, so it means na kaya pa nating bayaran yung liabilities natin. Okay, in measuring our liabilities. Next, 382 divided by 930. So on the previous year, we have 41%. Medyo malaki siya compared to current year. So medyo malaki-laki ang 41, di ba? Almost half na siya of your total capital. So mabuti na lang, during the current year, medyo nabawasan siya. So it means nagbayad tayo last year. Kaya lumiit yung liabilities natin on the current year. Next is debt to asset ratio. I-measure na naman natin ulit kung ilan yung percentage natin ng utang natin out from the total assets. Okay, so our total liabilities here is 270 on the current year and 382 on the previous year. Our total assets are 1,230,400 on the current year and 1,312,500 on the previous year. So, sa figures pa lang na ito, makaka-analyze na tayo na medyo we have the capacity to pay our liabilities since napakalaki ng assets natin over our total liabilities. But we have to measure pa din. So, ilan kaya yung percentage ng liabilities natin over our capital? So, ayan. So, 22%. It meaning, our liabilities is just 22% of our total capital. How about the previous year? Okay. Ayan, so here, in our previous year, 29% is our liability percentage over the total asset. Medyo malaki lang nung previous year, pero bumaba naman siya on the current year, which is good. Okay. So, it means nakakabayad tayo ng utang natin. Okay, updatedly. Okay, next is the equity ratio. You need your total equity. Saan ko to kinuha dito? The total equity, 960 and 930. Okay. So, sa total assets natin, ito. Please remember that. Okay, i-divide lang naman natin. I-measure natin yung capital natin over sa total na resources natin. Okay. Divide. So, that is 78% on the current year. Sa previous year, 71%. So, medyo lumaki yung equity natin. Siguro, it's because we generated income. Okay? So, that's the increase of our capital over our assets. Now, for the last formula, we have times interest earned. So, for the times interest earned, kailangan natin ng income natin before natin ibawas yung interest at saka taxes. So, from here, in this figure, we have income from operations. Ito yung income natin before natin ibawas si interest at saka si tax. Okay, kasi nandito pa si interest at saka nandito pa si tax. So therefore, our EBIT or earnings before interest and taxes is 101 on the current year and 76,250 on the previous year. So lalagay natin siya dyan. And then our interest expense is 18,250 on the current year and 21,000 on the previous year. Okay, so ilalagay pa din natin dito. Ayan. So put the formula, equal sign, 101 divided by, okay, interest expense. That's 5.53 times. Okay, which is good. EBIT divided by. Yes. So here sa previous is baba, sa current is tumaas. Okay? So that's how you solve your times interest earned. So there you have it, your solvency and your profitability ratios. So I hope you already learned a lot for this segment and see you next meeting for another next video tutorial.